Okay, everyone, welcome. We're going to start out today a little bit different. We're going to look at some of these industrial stocks, and we're going to get right into the charts. I'm going to give you guys a couple trade ideas that I'm seeing play out this morning, so you're going to want to stay tuned to that. And then what I'll do is jump into the general market analysis. We'll look at some gold stocks, and we'll wrap up. So I'm going to start out here with this JCI stock. I've talked about this for a while. This is an industrial stock, and basically, bigger picture, we're on another sell signal today. So you can see here, this is coming off your March 2020 lows, and you've got this clean uptrend line on this daily chart right here. Up towards the high, we started to put in a bearish rising wedge, and we started to build negative divergence for a while. So each new high that we started to make all through here, let me mark that out, was divergent highs. See how the momentum is just dropping off right there and just continuing to downtrend. So at that moment in time, we were looking for a sell signal on this stock, and we got that sell signal. It really came right here on June 17th, but you have to realize the way that this market works is it's a very resilient market. So even when you're on a sell signal, there's oftentimes counter trend moves that are designed to shake you off of any kind of sell signal. And moving, once we got that initial sell signal, which is the break of that trend line support, that's your trend line. You broke that trend, and it created this secondary trend line right here. So you can see all these days that we've been just kind of grinding higher after we got that initial sell signal, just moving higher day in and day out. But we put in new divergent highs. So you'll see we started making new highs, and yet momentum was clearly much, much lower. So you can see here on the PPO, let me zoom in, we're starting to confirm. See how that's turning down right here? Which means we made a new high, and yet the PPO is much lower than the former high right there. So we have confirmed negative divergence. This is just an extension of that divergence, and we're now getting a break of that trend line support, that secondary trend line support right there. So we're on another sell signal right there. See that impulsive breakdown? Now again, you want to wait, this is a daily chart. So in order for that sell signal to fully confirm, you'd want to see a daily close below this trend line, and you want to see it pretty impulsively below. You don't want to see it just barely below. If the buyers step in this afternoon, bid it back up, and they close, right in that area near that trend line, that's not good enough. You definitely want to see a nice impulsive sell signal or red candle, kind of like what we have right now this morning. So that is a sell signal, though, as of right now, indicating to me that I think we just saw the top in this thing. And you can see the price compression up here at the highs. It was just drifting sideways, these little tiny candles, and we're breaking down. Another thing that helps us confirm is some of these other stocks, industrial stocks, are breaking down as well. But ultimately, that looks like we just saw the high in this stock, and I think it's pretty much going to be downtrending from here on out. Could be wrong, obviously, but I'm looking for much lower prices. So I would say a move all the way down here would be 62.50 area. The 200 is likely going to meet up with that at that point in time as well. And then possibly lower, but definitely down there. And we've got another level of support here at 52.62, and then another level at 47.90. So there's your sell signal, another breakdown. Looks like lower prices from here in this JCI. Here's another one, ITW, Illinois Tool, just another, another stock in the industrial sector. And you can see we had a sell signal. Here's your March 2020 lows on the daily chart. There's your uptrend line. At the highs, we started to put in negative divergence. I have it marked out there on the PPO. This one didn't quite have the negative divergence on the RSI, so it was kind of mixed in terms of the momentum indicators. But we did have it there in the PPO. We got a sell signal. It kind of drifted sideways. Then it broke right there. There's a nice breakdown. And then you can see this thing, ever since that sell signal showed up, it's been just kind of drifting, grinding higher for months now. This is going all the way back to about June, mid-June, and we're, coming into mid-September now. So many months we've been just drifting sideways, but you can see when when the downside shows up, it typically wipes out all the gains very quickly. And that's what's happening today. The gap below this support line on the daily and just impulsively sold it down pretty much wiping out all the gains of the last few months. And this is how that works. Everyone who's long, when they're kind of grinding higher, everyone thinks they're going to be able to get out when the selling shows up, but that's not usually how it works. Typically, that selling shows up so fast that you're just not able to get out. And so anybody that basically has been buying this thing for the last couple months is now either break even or underwater. And we got the 200-day slightly below, so likely going to get somewhat of a bounce there. We got some support right there at 211.40. I'm not in this trade. Again, I didn't like the fact that we didn't have the sell signal and the negative divergence on both indicators, but something to look at. Here's another one, EMR. I haven't talked about this for a while. This one had a really clean sell signal. So here's your March 2020 lows. Clear uptrend line right there, and we basically had negative divergence as we continued to build. There it is in the PPO, and then the RSI, it would start to show up right about there. So each new high that we were making kind of in this area was divergent highs, meaning we were making new higher highs in price, and yet momentum was selling off and moving to the downside. We're waiting for a break of trendline support or a sell signal, and there it is right there. Nice, clean, big red impulsive breakdown. So that was a sell signal, but you can see the counter trend move. Once you got that sell signal, then they bid it up. The buyers kept in there grinding it higher, buying it higher. So I've actually stayed short with this one. Yes, I am down about 10%, I believe, on the trade from the sell signal. I took it intraday. I didn't get it at the close. I took it throughout the day, so I am down, about 8-9%. And I was down at one point about 11%. But the negative divergence has not been negated. It hasn't been burned through. So each new high that we made, basically here, oh, if I can grab the right tool, right there and there, were still continuations of that negative divergence. And that remains. So now we are seeing another break of trendline support. Here it is right here on the short, this kind of shorter time frame. This is a bearish rising wedge, and there it is. And we're starting to see it break right here. Now you want to see that daily close. Again, you want to see an impulse of selling. So if the buyers step in this afternoon and bid it up, well, that's not going to be good, and that means that likely it's going to shoot up and make, continue to the upside. So at some point, you obviously have to figure out when you want to stop out. But I still like it. Had a nice clean sell signal. My final target for this trade down here has always been this 72 area. We have a gap to fill down here and a pretty clean level of support. So that's always been the final trade. And the risk reward, right now, if you took the trade on the sell signal right here and waited to the end of the day, you're down. At most you were down maybe 12-13%, and then your potential gain was a gain of about 23-24%. So, about a 2.5 to 1 risk reward ratio. You'll gain $2.50 for every $1 you'll lose. So that's not bad. It's still a favorable ratio. If you take the sell signal here and short it here, it's, obviously even it's a lot better of a risk reward ratio. Nothing's guaranteed to play out, and we do need to see this daily close breaking this. But it, again, like on this JCI, we're seeing it. We'll see if the buyers can hold. ITW, that one's pretty much looks like it's definitely gone. They're not going to likely be able to recover that. So I'm seeing it across multiple stocks in this sector. And some of these stocks, if you go to the S&P 500 heat map, you'll see right down in here, this industrial area, you'll see some of those right there. Here's ITW right there. Here's EMR. I don't know if JCI shows up on this one, but several of those, key stocks or large companies are on sell signals today. Also, if we look at the XLI, which is the industrial sector, not necessarily a sell signal across the sector, we're just drifting sideways. So you can see here, just sideways action for many months, going back to April, and negative divergence has just continued to extend. You can see there, we just have clear negative divergence that's been building. This is where this negative divergence really showed up. So we're just waiting for, broad-based selling in this sector in the industrials, but I am starting to see those, continuation and sell signals in individual stocks. Wanted to point those out. Okay, some individual short ideas that are just continuing to work. ANF, you can see down another % or so today. Looks like we're starting to continue to the downside. So I'd expect the selling to get a little more impulsive. I think we're probably going to at least undercut the 200-day moving average and move down to this level right here at 30.33 before we see some sort of a bounce. So the way I think it's going to happen is we're going to fall down there, bounce up to the 200, maybe get rejected, and then continue to move lower. But I'll probably be looking to take some profit here at 30, that 30.33 area. Again, if you're shorting this thing, you always want to step in a little bit early from that key level. And the short trade, I would enter the short trade all the way up here at the back test of this resistance. So there's your uptrend line coming off of like August 2020. There's your uptrend line, negative divergence. I have it marked out there on the PPO, and there it is on the RSI right here. So that was an indication that we were going to look for a trend reversal. Then you got a sell signal right here. I didn't see this trade until it was already back testing right here. So I took the short right there, and we're moving lower. So this trade is profitable by about 25%. I think we're heading down to this next, this 30, 33 area before we get some sort of a meaningful bounce. So looks good to the downside on that one. BLK, more selling today. We'll see if, this one hasn't really hasn't really started to the downside yet. It's actually been back testing, but here's your March 2020 lows, uptrend line here, bearish rising wedge up here with negative divergence building. We then look for a break of trend. So there's the break of trend. And then ever since we broke trend, it's been back test one. They didn't fully back test here, but it did make a new high in price, which also was a divergent high. And then again here, it didn't fully back test the trend line either, but did make a new higher high in price, which was a continuation of that negative divergence. So I am thinking we're going to, break soon. We could run up and do a full back test, but I'm looking for prices to probably start to the downside, and start downtrending like that. So still like it on the downside for that one. Starbucks, looks like it got rejected at resistance. I had that marked out. When you get near levels, expect them to kind of overshoot it and undercut levels. You always don't usually stop right on the penny, but there's your level of resistance, 117.63. We tested it once right there, came back, tested it again, kind of overshot it, but no close above it on the daily chart. And that was a key tell. You can see they popped above it intraday, still closed below it. Tried it again the next day, still closed below it. And so now we're just starting to work our way lower. I think we're heading down to this level, down here at 109.51 as your next level of support. You also have the 200-day moving average right down there. So likely going to find some support down there, but that's where I think things are going. So this still looks good to the downside. And again, we took the short right here. I took it here on this this island cluster reversal. So this thing's up about 7%, or down about 7% from there, with another, maybe 12, 15% total. So we'll watch that one. Ford. So here's Ford's upward channel, price channel right there. No negative divergence on the PPO, but we did have it on the RSI. So you can see here, there's your negative divergence on the RSI, and the PPO doesn't quite have it, but we were making new higher highs, and they were diverging on the RSI. We then broke trend, so there's your sell signal right there. That was a break of trend, held support, that first level of support, which was about 13, we'll call it 1338, and then finally broke. So there's your break, back test, and it looks like we're going to continue to the downside. We have the 200-day moving average, so that's likely where we're going to find somewhat of a bounce. Maybe they'll bounce and chop around there, but at least a tag of that 200-day moving average I think is in order, and that would be a drop. If you took the sell signal, maybe that's a drop. This one is a potential drop of about 10% or so, 8.5%. 9%, down to that 200-day. But I do think we're probably going to undercut it down here to 11, 13, 11, 15. That's kind of my final target for this one. So I think that looks good. Some of these financial stocks are starting to, looks like they're starting to head to the downside again. So Ally Financial, I talked about this all the way back here in June. Haven't really brought it up since because we've been in kind of this topping pattern. But here's your March 2020 lows, a clear uptrend line on the daily chart. At the highs here, we had negative divergence that was building on the PPO and the RSI. And then we were looking for a sell signal or initial breakdown. And there it is right there. So this is where I shorted the stock right there. And then since then, we got the initial move to the downside. It really ended up hitting 47.05, which, from the sell signal, that was a drop of 14%. But then it's been creating this broadening wedge pattern right here. And that's a topping pattern. It's typically a topping pattern, an indecision pattern. So we've been kind of creating that. It looks to me like we're going to go test the bottom of the wedge all the way down here. And so that would potentially move us down to about 43. Maybe they'll bounce up the 200-day moving average as well. But that's as far as I can tell. And if you look here on the hourly, we basically have somewhat of a support area where they kind of undercut it a little bit here, and just the buyers were there. We're right there now, but it looks like the sellers are taking over. You can see, so we'll see how today is, how the day closes. But as far as I can tell, it looks like we're starting to get that daily close, pretty impulsively below there, which sets us up for a move down to the bottom of this broadening wedge, and some support down here at 43.24. And just scanning through these FANGs, the money today is going into the FANGs. That's basically what's holding the market up from, selling off, a lot more. You can see Amazon slightly up. Now, Amazon's coming into major resistance here. This is resistance that it hasn't really been able to break for almost a year now. It did break it once right here, but it failed, and we, sold off. So we're coming back into that resistance. Until that breaks, that's resistance. Google's just continues its slow grind to the upside. Nothing's really changed there. I do think we're going to get a breakdown soon, but until we see it, we're just slow grind to the upside. Microsoft, flat today. Apple's moving pretty impulsive to the upside. So in general, that's bullish on Apple for sure. I don't see any reason to short this thing. Looks like it just wants to continue moving up. And then Facebook continues to grind higher within this bearish rising wedge. So we're just continuing to move within the wedge. We could maybe pop it a little bit, grind around, then break, but that's kind of what I think is going to happen on this one. If you look at the indices, such as Qs, you'll see, we're not really moving down. Qs is up 0.23 or 0.2%. But if you look at the equal weighted Qs, we're down 0.5%. So just kind of goes to show that it's these FANG stocks that are rallying today, but the rest of the tech stocks aren't really doing that well. And then SPY, you'll see here, SPY's down 0.3%, but the equal weighted SPY is down almost 1%. So again, the market's selling off, but you've got the FANG stocks, 4 or 5 stocks with large mega cap weightings, kind of holding the kind of masking the weakness across the broad market. You're seeing selling in the broad market on lots of different stocks, but those 5 stocks are holding up the indices. So that's something to take note of. When you start to see that, you really want to focus on those FANG stocks, because when those start to break, if you see any weakness in those, there's no strength in the broad market. The broad market is selling. And so if these start to break, the whole market will break. So things to watch there. In general, I don't see any change really today in the Qs or the SPY. We're just seeing kind of that grinding action, just kind of grinding around sideways to slightly up is the bias. Gold stocks, so you'll see gold futures. Here's GC selling down to support, which is right there at about $17.95. Again, just looking at the hourly chart, you can see we pretty much held this area all through here, dipped below it. It was resistance through here. We popped above, kind of choppy right in here, but then we're above it, ran up to the nearest resistance, which is about this 1837, and then sold off down to support. So we're just grinding around within this range here. You can see If I mark it out, we're just kind of chopping around within this range. One bear trap right there, but then once you recover the range, we're just back to chopping around within the range. So we needed to see a definitive break one way or the other. And then gold is actually at support, kind of major support. So here's gold bullion. Here's your uptrend line. I've got it marked in thick green right there. You can see we've held support. Little bear trap right there, but today they're selling it right down to support level right there. And also 1790 dual support right here. We've got the upward trend line support, and we also have this horizontal support at 1790. If you look at the weekly chart, that 1790 goes all the way back to the last, kind of the last top back in 2011 through 2013 area. And that was it right there, 1790. It was resistance, resistance, resistance. This was just a overshoot kind of bull trap. And then you held resistance 3 times, 1, 2, 3, and then went into a big long bear market. And as I zoom in, you can see right where we're at right there. We're above it, but there it is holding dual support, 1790. So we're coming down, selling into major support. This is where the buyer should be at, where we should continue the upside move. Okay, that's all I have for this morning. I'll keep an eye out. I'm scanning, looking for different trade ideas. Leave me a thumbs up, guys, on your way out. And check out my stock market technical analysis course if you haven't done so. Link in the description below. Catch you guys on the next one.